Hello folks, this is Mike Mott from Mott & Associates with your June 2015 Educational Economic Update. In this month's video, we're going to talk about some of the major economic headlines from last month and give you some insights into what they might mean to you as an investor. Please stay tuned at the end for that required disclosure statement if you would. The Federal Reserve was in the news a lot last month as the Fed economists continued to debate raising interest rates. Let's take a look at the basics for a moment. Investors care about interest rates because they affect a lot of things: mortgage rates, inflation, corporate lending, and bond prices. If you own bonds, you'll see that when interest rates go up, the bond prices tend to go down as new bonds coming online that pay higher rates. On the other hand, you may be able to get a better rate of return on those higher interest bonds. So if you're in the market for a car or a house, higher interest rates will translate into higher loan rates and larger monthly payments. Businesses will also pay higher rates for credit, which can translate into millions of even billions of dollars of extra costs, which could affect their bottom line. So if that's the case, why is the Fed raising rates? Well, the short answer is they need to get back to normal monetary policy in order to fight inflation, which can become a problem in ultra-low interest rate environments like the one we're in now. To boost the economy after the last financial crisis, the Fed kept interest rates artificially low, but now that the economy is doing better, the Fed would like to slowly raise those rates back up. However, the latest data shows that the economy still may be vulnerable to shocks, and the Fed doesn't want to raise interest rates really quick. At the end of May, economists released the revised first quarter gross domestic product growth numbers. And we found out the economy actually shrank 0.7% last quarter instead of growing. While that news isn't unexpected, it's not a welcome sign. It means the economic recovery still hasn't reached what we call escape velocity. The contraction appears to have been the result of the harsh winter weather, a strong dollar, and reduced business demand. Though we don't have data for the spring quarter yet, many economists expect a significant rebound in economic growth. We've seen estimates ranging from 1% up to 3.2%, so that's clear that there's a lot of room for debate when it comes to the economy right now. On the positive front, recent economic data shows that the economy added 223,000 new jobs in April, pushing the unemployment rate down to 5.4%. Wage growth also edged a little higher as workers were able to earn higher paychecks in a stronger job market. In the weeks ahead, investors are going to be watching for more insight from the Fed into those interest rate hikes. They'll also be poring over the economic reports to see whether the first quarter weakness continued into the second quarter. We hope to see further improvements in things like housing, manufacturing, and consumer spending as the year progresses. As always, we'll be keeping a close eye on financial markets and the economic environment, and we'll let you know if we think there needs to be any changes in strategies. Oh, before I end, I want to let you know about a few events that are coming up for Mott & Associates. The first one is the Savvy Social Security Claiming Strategies Workshop, which is coming up in a week or two. If you haven't signed up, you should. Also, one of the things we're really excited about is the 50-plus free golf. If you're 50 or over, you'll be able to have an opportunity to play some free golf with our friends at the Preserve Golf Club. So watch for your emails and your mail about that. And last but not least, we're starting a new series called Monthly Lunch and Learns. It's going to be the second Monday of every month. The first topic is going to be retirement income planning. So watch your emails for that. And also, we're going to update and give you a complete schedule of all of the topics coming up as soon as we get them all arranged. So once again, this is Mike Mott from Mott & Associates, signing off for the month of June 2015. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation or simply have a question you'd like us to answer, please give us a call at 941-746-3216 and we'd be happy to talk with you. Well, that's a wrap. Have a good one.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. Please consult your financial professional before making any investment decision.